there are so many creative people out in this world who know how to do wonderful things that I don't know how to do. But that being said, if those people need to borrow capital, you just have to lay your foundation, get what you need, because the more visionary a project is, the less people are going to lean back in that chair and just kind of look at you. And so you just have to be aware of that not everybody sees things the same way you do.
Okay, welcome back to the show, everybody. My name is Trent Knott, and our podcast or YouTube channel is Who Dare Go There, Opening Your Own Business. And today we're going to be talking about money, money, money. And I'm so excited to talk about that because that was one of the hardest things about starting our business is finding the money. So today I am so thrilled to have Will Sanders with Planters Bank on today. And Planters Bank was one of the first people that we engaged with to start Miss Lucille's Marketplace. So they are special friends of mine, and they're a local bank, and I highly recommend local banks wherever you are because of the relationship. But we're going to get into that part in just a minute. But today, since we're talking about money and about borrowing money or whatever that looks like, what does the Bible say about that? So we're going to talk about that for one sec. And I go to Proverbs 22:7. The rich rules over the poor, and the borrower is the slave of the lender. Now, we're going to get into the meaning of that here in just a minute with Will, but that is our scripture for today, and I'm going to say a quick prayer, and we're going to get started. Dear Heavenly Father, we thank you for this gorgeous day you've given us. We thank you for our relationship with Will and the banks that we have and getting to know one another, Lord, and we just thank you for that blessing. Lord, we just thank you again for your Son, Jesus Christ, who died on the cross for our sins. And those sins are the past, present, and future sins that you've forgiven us of. And Lord, we just want to serve you in any way we can. And we as Christian workers and business owners, and we want to glorify you in everything we do. Lord, just show your favor upon this show and let us get out some good news to everybody, including your will. In your name we pray. Amen. Amen. Okay, we're back and with Will Sanders with Planters Bank. And let me just first, before we get into what the Bible verse really means to us or to me, let me tell you, because I tell people we use the Bible as our guide to our business and our life, right? So in the Bible, it talks about money, possessions, wealth, 2,300 times or 2,300 verses in the Bible. 15% of Jesus' time, he talked about money. And out of 39 parables, 11 of them are about money. So to me, the Bible is a great guide, and it's very important, evidently, to Jesus and God about money in general. But it goes and it tells you how to, if you need to borrow it, what to do, when giving it away, and everything everything you want to know about the Bible. So Will, tell me on the verse that I read, what do you think that meaning is to you?
Well, for the rich to roll over the poor, I think in the context of the time when it was written, there was not a middle class. I think that was one of the benefits that we have in this modern society today, and especially under this system that we operate in Western civilization, that there is a chance that our laborers as individuals, we're free to decide how to deploy them. You are free to say, I'm going to buy Acme Boots Warehouse and turn it into this place of business. They didn't always have that option. It was very much a have and a have-nots back in that time. And I think for them that was the case. You had to have a wise and just ruler like a Solomon in order to avoid that wheel of constantly taking advantage of those underneath. And that wasn't always the case, and it really hasn't been the case up until the last maybe 3 or 4 centuries where there's been a change in society and in life. So for me, that covers the first verse. The second verse, the borrower being a slave to the lender, or the second half of the verse, borrowing money has been happening since money has been created. Money is not the root of all evil. It's just the common denominator of our efforts. And it is a way we value the results of what we do. So the responsible use of money, just like anything else, whether that's wine, time, whatever, irresponsible use of anything we have in this day and age
Absolutely.
is a problem. So for the borrower to be a slave to the lender, that implies if you are responsible with this, with whatever you're doing in life, it should work out for the most time in your favor. If you plan, if you prepare, if you use wisdom and come up with what you need to do, you will not be a slave. It's when things go against you that you start losing control of everything. And it's not just Old Testament. There's an Italian proverb that says, "He who has a partner has a master." It's the same.
Yeah.
It's the same notion. And so to have all that in that verse is a lot, but it just goes to show when things get out of your control, and what drives them to get out of control are generally the human nature and human sin, greed, pride, ego, all of those things. And those always lead to the fall, as the Bible tells us.
You know, we've talked about greed, and we've talked about pride especially, because I think, you know, I tell everybody, and I've said it again and again, but I can't tell you enough, that pride was my downfall of not getting to where I needed to be faster, because I thought I was so good and so proud that I wouldn't ask for help. And so it goes along with money. So you're saying that borrowing money is not a sin.
No.
It's just, you know, but when you don't educate yourself, and you don't prepare for all the negativity that may come, then you're going to be burdened, and that's kind of when you get over your head. And
That's right.
Just know what you're doing going in, right?
That's right.
So when I go to borrow money, let me go back, because Planters Bank, when I went to Planters Bank, and I went to them with the idea of Miss Lucille's. Miss Lucille's is a marketplace that we own, and it's over 200 booths that people come in and they rent from us and they sell their goods. But those goods are, I say the elevator speech is, it's a mixture between American Pickers and Pinterest. Mm-hmm. So when I got involved with Planters Bank, I went to them because they didn't have a clue that I wanted to open up a flea market per se, but they didn't understand what our vision was. So Our vision was an eclectic mall, a mixture between American Pickers and Pinterest. And so we even had booths set up to where when the vendors came in to view what we wanted, we had a sad face, a smiley face, and these are the things we're looking for. Then I built out a lot of the booths to begin with because I wanted them nice looking. No lattice work, no chicken wire. Yep. That's not...
No flea market.
No flea market. So, you know, when I went to, I think it was Suzanne at the time that we went to, and we became, because of my relationship, she kind of got the numbers, and, you know, it wasn't all that much money to begin with, and so, because I could build out all these things myself, and so it wasn't that much, so they took a risk on me. So, but let's take a squirrel trail, as I said we would do. How important is the relationship between an entrepreneur and you as a commercial lender?
Well, I think you touched on it briefly in the introduction, community banks. And I'm going to tout America as being the greatest country once again by saying that not all countries have a community bank system. And what community banks do are they fill this void of capital needs. Where do you get your money? The question you ask, how do I get money to do what I want to do? And a community bank for a project that is not large-scale, corporately audited, large finance, they are your best avenue to do that. And so to come into a community bank, the best thing you can do is have an existing relationship with them. That is not complicated. You don't have to know the president of the bank to do that. What you need to do is open an account. That's the first step. You have an account in a community bank, you use it, put money in it, and then as a real estate customer of ours who's very well known in the community said, go out and borrow a little bit of money from them. Just a little bit. Doesn't have to be much. You don't have to, you're not building the Statue of Liberty here. Just get a little bit and then pay it back as quickly as you can. And guess what? They'll want to loan you some more in a bigger amount. And that's how it starts. And so the trick is, and I think what you've asked me to be on the show today for, is to talk about how to get in front of that banker and say, here's what I have, here's what I've got, and here's what I want to do, and to have your affairs in order and have what you need to where that banker says, you know what, all right, this is a good risk, because every loan is a risk. Every loan is risk, and banking is risk business. Just like insurance, it's just a different shape of it. And so from that standpoint, you just have to weigh the risk, and if it's a good risk, then it gets done.
Okay, so I come to you with a project, and you look at it, and it's because even though you know me, I still have to qualify for this loan.
Correct. So, 100 years ago, that may not have always been the case. In this day and age, with regulations, we do need to show certain qualities. And that circles back, when you start learning about loans, you start learning about the 5 C's of credit. Conditions, character, capital, capacity for repayment, and collateral.
Capital.
All those things. So that circles back around to it. So you have to have all of these aspects in play in order to make a deal come together. And it doesn't have to be perfect, but we have to document it. And so that means we have to get proof of income, because capacity for repayment is what pays the loan back, which is the most important part for the bank and for you. You want to get it paid off so you can have free cash flow. We want to get it paid off so we get all our principal returns. We're then free to loan that money back out for another request. So you have to show that you're making money. If we're starting a new business, obviously that business isn't going to make money, but we need to have income coming from somewhere to justify the deal and to show that in the near future we're going to be able to repay it. And so that all circles back together with the capacity to repayment, and you have the capital to stand on your own feet while everything gets up and running. And those are the 2 biggest issues that small businesses face.
Okay, so I start a carpet cleaning company, and I go buy a carpet cleaning van. Of course, the van will probably stand for itself with the equipment in it. I still may have to put up a little, whatever that looks like. But then if I want to expand any, and I'm not showing any income, but I need, I need an office and whatever that looks like, whatever I need, other equipment needs. The equipment would probably stand for itself for the most part. But what if I just needed extra capital? How do I justify that? Or how do you justify that?
Of course,
or is there a way?
There is always a way. The caveat is it depends.
Yeah, absolutely.
So, whether you're starting a business straight up, I'm going to go in full bore on this. This is my job. I'm going to do it. Or if this is a side hustle that grows.
Yes.
And typically the side hustle that grows is a really good option. But in the case of Knott's carpet cleaning, where you need a van, you need some equipment, you need a place to store all this stuff, and you need some working capital to fund while you get up and running, you come before the bank with that, and we're going to say, all right, we see that your business has some collateral. You've got the equipment, you've got a van, that's all fine. That's only going to cover a portion of it. Working capital, that's going to be something different. We're going to have to find what we call additional collateral. And so for most people who are starting a small business, we want them to have skin in the game for a couple of reasons.
Explain skin in the game for a 16-year-old that may be watching.
So skin in the game typically means like a down payment. So as you can imagine, if you borrow or if you're needing to buy a $50,000 machine or vehicle, it's a whole lot better deal. Your payment will be lower if you put, say, $10,000 down on it. 20% of the money, your payment's going to be lower. Plus, you're less likely to just throw your hands up and walk away when something doesn't go your way. And that is an issue, and that happened a lot in 2008 with people in houses.
Mm-hmm.
So when you have skin in the game, you're less likely to walk away from it. In this case, with back to our story of the van and the equipment, we wouldn't want to finance all of that. It's a startup business. If this is something you've been working for or planning on doing, formulating a plan, you should have some cash saved up to put into this. You're going to have to do it. That being said, we may keep that cash aside and then finance the equipment or some balance therein to keep you some cash for your working capital. But there's always ways to do it. Another way that is quite is very successful and shows a sign of good faith and skin in the game is if you own your own home and you've been paying down on your home to utilize some of the equity through a home equity line of credit or something along those lines, because that is essentially capital that you can be used to do that. So we always advocate, I personally always advocate, even though when rates were so cheap a few years ago, just pay your house off as fast as you can. I like it, and I'm not saying 5 years, 15 or 20 is fine.
Oh, no, okay. I owe a little bit on my house, and I refuse to pay it off because the interest rate is 2.3.
See, there you go. That being said, for someone who's wanting, if you know that you're working in a job, to that 24-year-old or 25 who wants to be their own person,
right,
and they're trying to figure out how to get to that point, you don't know what you want to do, I would tell you to either save cash or aggressively pay down on your house, because both of those show responsibility. Both of those, if you sat in front of a banker, he or she would be able to see very quickly that you've made good decisions and that you then have options. And so as your house appreciates and your balance goes down, next thing you know, it doesn't take long to have substantial equity in that house to fund the startup of a small business. That with some cash saved, you walk in, and that cash is in a community bank, and you walk into that community bank with this plan, it starts making very easy sense.
Well, the thing about even paying your house down quicker, in the sense, if you're making your house payment and your house payment's $1,000 and you put an extra $500 with it, that goes directly to the principal,
Correct.
Not to the interest. So, of course, you're going to gain equity so much quicker that way.
That's exactly right.
So you're not just wasting that money.
You are not. You're building, there's a capacity for repayment, and there's the capital of your financial position, and that is your net worth, that is your financial statement, something every banker is going to want to get from you. And for most cases, it's a personal financial statement of everything you own and everything you owe and how that all shapes out. That drives so much of it, coupled with your ability to repay the loan.
And that's a good point, what you just said about even a personal financial statement, is because you might as well just copy one off the internet and have it ready when you go into the bank to begin with. I mean, you might as well just have it with you.
That's right.
Because you're going to have to do it anytime anyway.
It's an abstract kind of form if you've never filled one out before, but when you do put the information on the page, it's a snapshot of that day and time. It's July 11th. I need to work up a financial statement. I look at my account balances. I look up, any assets that I have, personal property, equipment, then I'll look over at credit cards, mortgage on the house, car payments, student loans, whatever. Write those payments out along with the balances, and you can track it. And then next year, because the bank's going to want you to do one every year because they get stale and things change, so just start over and do another one. You already have your template. Go in there and just change the amounts, and you're done after 5 minutes. And you've got one of the key things that a bank's going to want from you every year.
It's just,
and
it's
plus,
a snapshot of your life.
That's right. And then you can compare it to the year before, and if things are working according to your plan, you've seen debt reduced, assets go up, and your net worth goes up. Because every time you make a principal payment on something that's constructive, like your house or business equipment, something along those lines, you see that debt dropping, and hopefully those assets going up, and your net worth increases, and that's when you start getting the taste of what your efforts are bringing.
Well, a lot of people think, and I'll backtrack what I'm going to say here in just a second. People think that their house is an asset. It is not, in my opinion.
Yeah.
The only way it's an asset if you can use the extra capital on your thing. Then it becomes an asset. But other than it just sitting there, the only time you're going to make money on your house is when you sell it.
That's exactly right. It is not an asset in the sense of it's a tool for building wealth, but more than that, it is your home. It is your domicile, is where you and your family, which is the most important thing on this earth, where you and your family live. So you also have to be careful with that, because once again, it's responsible. You don't want to become a slave to the lender, we talked about. If you are going to utilize your home equity, you have to be responsible with it. You have to have a plan to pay it back. You have to implement that plan to pay it back, and then it works. But you can't just you can't go in all willy-nilly and expect things to work out. You have to be disciplined and have a plan. And typically, and this is the hard part, that plan's going to hurt on the front end.
This is sad but true. Me as an undisciplined entrepreneur going 28 miles an hour, I've been in the position where we borrowed from our house and it took me forever to pay it back off. It wasn't like, I'm going to borrow for this and I'll pay back as we go. I would pay the interest. How horrible is that?
And that's typically a structure, whether it's a credit card or a home equity loan.
Right.
The home equity loan's a better deal because it's collateralized, has a lower interest rate compared to a credit card, but you have to pay that principal back. It's just going to be billed for the interest, but you have to have a plan for paying that principal back.
Whew, man, because I have been the slave to the borrower.
That's exactly right.
And now I owe a lot of money on my projects, but my projects are not, they're good debt is what I call good debt.
Yep.
Because if I can use other people's money, that's what I like to do. Even if it's some of my own money that I inject, I sometimes pay myself interest back on those loans as well.
And you can watch YouTube videos till you're blue in the face of these very smart guys like that Kiyosaki and some of the others, the Rich Dad, Poor Dad. And, they tout that, and I've watched some of his stuff, not all of it, but it is interesting to see. It's not for everybody.
It's not for everybody. I like it.
Yep.
But I love it.
It suits a growth-minded person. But that works extremely well when the cost of money is 5%.
That's right.
When the cost of money is 8%, you have to be a bit more disciplined. And we're not far away, historically or looking down the road, of seeing rates that are higher, and that can always cause problems too. But each situation provides opportunities. You just have to be prudent in how you apply them.
My rates on different things from 4% to 8% could mean $20,000 a month.
It can change everything.
It could change everything. So to me, all right. So when I call Will, it's not always about me borrowing money because of our relationship. I think Will is one of the smartest bankers that I know, and smartest guys that I know. Actually, that may mean I don't know a lot of people, but you're up there at the top. So.
I was about to say it's a small pool we're all swimming in.
But I'll call my banker and ask him questions about what I'm fixing to get into and what his thoughts are. I don't go by what every banker says because not everybody has my brain or what I'm even visualizing. But earlier I said pride gets in the way, and don't let your pride stand between you and your banker of calling and say, what do you think about this? Just because he's going to say no to me doesn't mean I'm going to quit what I'm doing. I just may find a different direction.
Well, that's right. And you mentioned vision, and you said visualize. Trent is a person of vision. We all know this. Like you see things. You and Dana have taken risks that not everybody can see. I never would have thought to do some of the things you do. I'm a bit more of an in-the-box kind of person. So that being said, when you have, because there are so many creative people out in this world who know how to do wonderful things that I don't know how to do. But that being said, if those people need to borrow capital, you just have to lay your foundation, get what you need, because the more visionary a project is, the less people are going to lean back in that chair and just kind of look at you. And so you just have to be aware of that not everybody sees things the same way you do, but there's probably a happy medium. And from the bank's perspective, we have kind of templates of how deals should work. And we have those templates because over time they've proven us to work that way. It's like an insurance actuarial. We know that if a deal doesn't work under this set of terms, there has to be a reason why, and it's probably not a good reason. Especially for an investment. An investment should pay off quickly through generating cash flow to return to the person who took the risk. And so we have a template, and when something doesn't fall in that template, we kind of get a little squirrely as bankers. That's in our nature.
Absolutely.
And because of good reason. Because no one likes having to go through the process on the back end if a deal does not go the way it's supposed to.
I've changed directions in my banking situations. Now I don't go to the bank.
Yep.
I have them come here, like you, and walk around and say, look, this is what I see. This is what I want to do, because I want you to physically look. Because when you get back and you run my numbers, sometimes my numbers are crazy because it's a chess game of where you put your numbers, but they're always there. You just got to show the bank where they're at.
That's right. And so for people who have lots of things going on, like the person who is, building houses or developing properties is a fine example. The same as building a business. Mm-hmm. You may not have a full year's worth of info. You don't start your business successfully on 1/1 and close down 12/31 year-end books and it all looks perfect. It's going to be wonky. You're going to have 12 months worth of expenses and you may have 3 months worth of income. And you have to be able to explain that to a banker, and a banker has to believe you and understand and see what's happening. And then they can say, all right, well, we know he's got 3 months of this. It's going forward, business as usual. Let's take this 3-month number and times it by 4 and apply it and then see what happens. It's common sense stuff.
But you have to point it out to a lot of bankers. Yeah. I'm just telling you because, right now somebody can get my financials and year-to-date information. That means from January through June, let's just say, and they'll look at it. But what they don't realize is I'm really a 2.5 year type business. Yeah. Miss Lucille's is we do as much in December that we do half the year, to be honest.
Yeah. It's 6 months for you, I would imagine.
Yeah. And so you have to be educated about your own numbers. So what I'm saying to people out there is, if you don't know what a profit and loss statement is, or you don't know what a balance sheet is, there's things all over the internet. Go educate. I tell people, educate yourself every day on something. The more you educate, the more I can talk business with him and tell him, this is my projections and this is what I think is going to happen. And because of my past record, they're going to believe me more than if I didn't have a past record.
That's exactly right.
So let's talk now. I'm new, and I brought this today. This is a proposal that I did not too long ago. And even though I have a track record, and even though I have past history and maybe some capital, whatever that looks like, I still don't take the banking industry for granted. Mm-hmm. So I want them to know the full picture. So I brought them down here. This wasn't with Planners Bank, but it's okay. I have other relationships, and so
we're not mad about it.
And so, but in this proposal, it's for actually Varsity Pens up here. And so we took a room and we're going to turn it into from an event center to a mini bowling, sports bar and lounge type situation. It's really family oriented, but it's so cool looking that's my second favorite thing to do. But even in this proposal, and what sucks about these proposals, sorry I probably said that, but it's life and it does. When I do my proposals, I'll sit there and I'll go through all the numbers, what I think we can do, how much everything's going to cost. It's a clear picture to the bank of what it's going to look like. And now that Chat GPT is out there, people can say, hey, just do this. I do all this by hand.
Yep.
And everybody, but I think I learn more by doing it this way.
You do.
And it's just, I'm going to show you one thing if I can get to it. I should have been... But I have my financials in here. I have a resume in here of myself and my wife and what our family is. And like this one's coming up and it's for the City Forum expansion. So we're going to put together like a drop tower, a roller coaster, and a kids in play. So when I go to the bank, I don't want them guessing what it's going to look like. I want to have them a full picture of what it's going to be. Because the more information I can give them, and my numbers don't look as good, the better off they're going to see where my projections are. And the first year, even in City Forum, when we opened up, my projections were, let's say they were $100,000, which is not true. I'm just making up numbers. But I projected to be $100,000. Well, I came $99,992. I mean, I was that close to my projections. Now, did I get them to where I thought the projections were come from? No, but I still came to that number.
That's right.
And so, a lot of sleepless nights when I created the City Forum, because here my payments were going to be huge and I didn't know if it was going to work out. A lot of time on my knees. Me and God got real close during that period of time, and He always took care of me. I mean, I've never worried about making payments to the bank. I've never worried about making payroll. And that's can be stressors in a business of this size.
Slave to the
slave to the lender. So instead of me coming in here and telling Will that, hey, I think I want to do this business and this is what I'm thinking about. Don't do that. Save everybody's time and go through the trouble of putting together a proposal, a business plan, and tell him where the money's coming from.
That's exactly right, because that helps us to understand that you have put pencil and paper to it and that you know what you're getting into. There's the likelihood of there being something unseen or overlooked is reduced. He never gets fully taken away, but that just implies that you have a handle on what you're getting into and you've thought it all the way through. And when customers come in and they say, here's what we're doing, and it's laid out in all that format, it's a big reliever. It makes our jobs easier because our underwriting department has everything in one document that we can see, do, touch, flip through, look through, and it all pieces and flows together. And the more that happens, the more comfortable the bank gets with any sort of deal. So it's just a matter of, our crystal balls don't work any better than anybody else's. So the more communication you have, especially some upfront homework like this, it all pays out.
It is, but when I went it took me forever to go. I went, hey, you're going to go to banks and they're going to say no. Yep. Well, put your big boy pants on and just suck it up and go to another one, or find out what you did wrong and go to another one, or, there's other ways to get money. So, but you're going to be told no. And that's just, I was told no by 3 or 4 banks. And then one bank said, well, if you're building appraisals for this, and they really didn't think it would, but it did. And once they said that, they were kind of committed. So it's like, okay, you said that, now let's do this. And there's other ways, because the big building is part of an SBA loan, small business loan.
Yep.
And so that means they took part of it, and it worked out. And there's creative ways to make anything work. There are so many creative ways, and I probably am the master of creativity in financing because I never had money. So since I never had money, and now I'm going to you, Will, and you say no, Trent, I'm so sorry, we can't do this.
This just isn't for us.
Where else can I go?
Yep.
I mean, this is off cuff, and I know it is, but I've done it. So
what you mentioned, the SBA, that is always the Small Business Administration has been a government arm that helps through different loan programs steer people in the right direction. And we have groups here in Middle Tennessee who facilitate that on behalf of SBA and partner banks in the region. They can look at doing something like that for you, and a banker can help put you in touch with them. And in certain deals, the banker will partner with the SBA to bring in capital. SBA will contribute 40% of the need. The bank puts in 50 and the borrower puts in 10. That's a pretty standard program for them. And that exists when collateral is kind of questionable in business loans. So that's an option. A lot of times people will go to the rich uncle, or however they call them, which we in the business we call hard money lenders.
Absolutely.
Who charge an exorbitant rate, but they need to for the risk they're taking on, because it's a bigger blow to them if they were to lose out on a deal.
So you're saying if I go to somebody, which I did in the very beginning,
Yep.
and I said, okay, and rates were like 3 or 4%, they were going to charge me, or I even offered. I said, I know for a fact, I'm just to have all the confidence in the world that this is going to work. I think even though rates were at that point, I said, how would you like to make 10% on your money? And because I wasn't scared.
Yep.
And so, but in today's rates, the rates at a bank today, the prime is probably 8.
Prime's 8.5.
8.5. So that means that you're going to pay 8.5 no matter what, basically.
Yep.
But then if you go to a private investor or a hard money lender, you could be looking at 12 or 15 or more.
That's well within the realm of possibility. Because in the lower rate environment of a couple of years ago, it was standard for 10% hard money. So, but it's it's risk and it's access to capital, and so we recently, I'm going to try and do this without giving away names.
Yeah.
The bank recently had the opportunity to help a couple who was provided the opportunity to buy the business that they'd both been working for. They got to see under the hood of this place, and they'd basically been managing it. And the owner said, well, how about I sell it to you? And they were just employees. They've been paying down on their house and things like that, doing what they're supposed to do and trying. They've been contemplating things to do. They were not expecting this to just fall into their lap. And this is another one of those situations where somebody becomes a small business owner without the intention of becoming a small business owner.
Absolutely.
They saw under the hood, saw what their efforts were doing, and this is kind of a once-in-a-lifetime opportunity for someone to really change their life. And it was a hard stretch because it was a business, and how do you collateralize goodwill or, an existing business that you're having to pay a premium for because it's got contracts, value, reputation, all those things. There's not enough trucks and equipment and inventory or whatever it is to oftentimes pay for what you have to do to pay that business. So these people, to their credit, said, we got everything we've got. You take it. Life insurance policies, home, everything. Like
They bet the farm.
They bet the farm. And we went to SBA and partnered with SBA and closed this deal for these people last week. And so they now have a chance to own a multi-million-dollar business that they did not know about. It took a little bit longer with SBA involved.
Oh, absolutely it does.
But that's the nature of government. But I felt like I didn't close this loan, but I was familiar with it. And my colleague who did close it, he came in and he said, I feel like we've done something good today. And you do. I mean, that's not just a real estate deal for someone who does 100 real estate deals every 5 years. We changed some people's life, and we hope it changes for the better. We think they have all the capacity in the world to do it. Now we're comfortable with the structure of the deal. Our risk is lessened through the SBA, and they have the chance to run this business. So it's risk. Risk has not been removed in any way.
No.
But it's lessened for all parties, and they get the chance to own a business.
And now, with them owning that business, now the education really comes in.
That's
right. They probably didn't have to do much with the P&Ls. I could be totally wrong.
That's exactly right.
But that education starts.
That's right. And so you need a good banker, you need a good accountant, you need a good insurance agent, you need a good lawyer.
And so, in saying what he just said is perfect. And, to me, the most important one was the money man. So that's why I had Will on first, because this is part of the education you're going to have to be a successful entrepreneur. Because, I may come up with an emergency that I need X amount of cash. Well, I think it's wise, and I've told somebody this to do this the other day. I said, you just closed on your house. Now you go get a HELOC on your home automatically. Mm-hmm. You may never use it, and that's fine, but what if an emergency comes up, or what if you find another house you want to buy, or whatever, you have that excess cash? Because I teach some of my employees around how to do real estate so they're very conservative, and I'm way out here, so we compromise. But these are very, very important relationships. So the banker, like I said, Will was one of the smartest guys I know, and I still run stuff by him. And we're going to go eat lunch here in a minute, and I'm going to run some more stuff by him because
the reason he got me here.
That's right. So, guys, I appreciate y'all tuning in, but have your stuff ready when you go see a banker. Don't just go. You need to go meet some people and just shake their hands and introduce yourself and tell them you're coming to see them. It's not always easy to get to the commercial loan officers because they're so busy, but start those steps immediately and get to know these people. It's so important.
And once you learn how to play the bank's game,
yes,
the world gets a lot easier. I mean, you can still have, you still get to do your path and go down your path the right way, but once you know what the bank's looking for, you can show it to them, and it gets easier and easier and easier, and your relationship keeps growing.
I even go as far as when I see my P&Ls and my tax returns, I go out to the side and say, look, this is how much money I gave away. This is how much money my family makes in payroll. This is how much. I just want to paint a real clear picture of where my income is and why my taxes may or may not look so bad, because it's a chess game on your taxes.
It is. And so that's, once again, you have to have a good relationship with your CPA, because the CPA is going to make as much money for you as you are through your efforts, because there may come a time when they steer you in a direction different from what you thought, and it could save you who knows amount down the road.
Well, guys, we may have gone over a little bit today, but this is such a major part of being an entrepreneur that I think this is probably one of the most important shows that we'll have, because it's about educating yourself with the money, how to get it, what to do with it, and when you make it, also the Bible will tell you how to spend it as well. Yeah. And so I think that's very important. In the Bible, that's one of the things that God says, test me on, is money.
Live below your means.
Live below your means. And so I've not always done that. It seems the older I get, the less money I need, though. And I don't know what that's about, but it's all good. So, guys, I hope you've learned something today from Will, and he is local here in town as well at Planters Bank in Clarksville, Tennessee, and we do appreciate our relationship with them so much. And when he said you don't have to know the president, well, our family actually knows the president, and it's so comforting to know that the people know who you are and what you're doing and have more faith in you to do sometimes the impossible. So it's really a great situation. So again, I want to thank Will so much for being on my show. He's a very important part of our progress here at Project 2231. And if you want to check out some more, just check it out. I said I was going to say this funny because I'm kind of old school. MySpace, do we have a MySpace? Oh, it's Facebook and Instagram and YouTube channel. So go check us out. Thank you so much.